GST progress is something which markets and corporate India is watching very closely. So, we thought of getting you a special voice to get a better sense regarding this subject, markets, whether India is GST ready. We have got someone who understands the markets as well as he understands taxation. Of course, he also looks into investment banking closely. So, has got a keen eye on corporate India. Ashok Wadhwa, MD and CEO of Ambit Holdings, is joining us on the show this evening. Ashok, good evening and thanks very much for taking time out for us to chat with us. The GST rates have been decided and finalized, and by the looks of it, vast majority of the items are actually seeing shrinking in their tax rates, and more importantly, the reform is progressing steadily. What's your take on it? How are you looking at it, and do you actually see benefits also start coming in shortly?
Yeah, I think there are two important points that I'd like to start with. One is I'm so delighted that the government, with single-minded focus, is resolving this whole GST issue and putting all cynics in their place. There were a lot of rumors about will the government be able to do it, will July 1 be the deadline, will government be able to resolve all these issues in time. And I think the resolution with which our finance minister has approached this subject and the manner in which he's resolving all these open issues is really remarkable. It gives me immense amount of confidence that this government is much better prepared than many of us thought in terms of being able to get GST implemented on a timely basis. Coming to the rates itself, I think there is a lot of welcome news. Clearly, the government is very focused in trying to lower the cost of goods, particularly consumer goods, and particularly to the middle class and the lower middle class. There were a lot of discussions around will GST be inflationary in nature, and with its mind high on trying to contain inflation, government has, I think, very deliberately kept GST rates on essential goods and commodities and hopefully services now at a very acceptable level of between 12 and 18%. I'd like to believe this will result in lowering of prices. Obviously, government will expect some of these price reductions to be passed on to the consumer, and why not? But I think it's also very good for corporates. I think several corporates will benefit. Those who have operated in a relatively unorganized manner, using tax and non-compliance as an arbitrage, will all have to rethink about their strategy.
And Mr. Wadhwa, since we're talking about strategies, I think the one worry now that we have the rates more or less out of the way is just how prepared India corporates are for the implementation. The worry is that it could cause some short-term disruptions. How much of a worry or a point of bother will that be, you think, for the market?
We all need to understand GST is a game changer. Not only is perhaps one of the most important reforms in post-independence India, but regardless of the nation and the timing in which GST has been introduced, it does create chaos for a period of time. Therefore, we should not misrepresent or underestimate that GST will cause a bit of a chaos, and regardless of how well prepared one is, it will cause delays, confusion and frustration for a period of time. The real impact of GST will only be known in 12, 18 and 24 months, and I would like to believe it will be very positive and it will add to our GDP, as many learned commentators have stated in the past. Having said that, it is my belief that corporate India is much better prepared than we sometimes think of it. I think certainly large corporates and even medium-sized corporates, those who have believed in the concept of being compliant, those who have believed in the concept of using technology as an enabler, I think they're all relatively well prepared. Having said that, you can never be prepared enough when an important change like this happens.
So, could you quantify it by how soon do you think some of these, benefits that you just, walked us through, by how soon will we be able to see them materially show up in the market? When we can start seeing them in the numbers, let's say whether it's GDP, a GDP to tax ratio?
So, the benefits can be calculated in 3 steps. One is on consumption itself. I would like to believe that some of the benefits will pass on to the consumer by way of lower cost of goods and services, and that itself will hopefully have a positive impact on demand. That in turn, of course, has an impact on GDP. The second impact will be on corporate earnings. I'd like to believe that both simplicity of taxes, avoiding duplication of taxes, and lowering of cost will partly be passed on by the corporates and partly retained by the corporates. So you will see hopefully a far more bullish corporate earnings scenario, and that obviously will add to the GDP of the nation. And the third, just the efficiency, the amount of time that is wasted today in the supply chain, as that gets better organized, and that could take 12, 18 months. As I said, companies will have to relocate their warehouses, companies will have to restructure their distribution arrangements. That's time consuming, and the full impact of that, in my opinion, will be somewhere in the 12 to 24 month time range.
Ashok, this is also a time when markets, of course, are at record highs, but there's also a point being spoken about that which market may be jubilating about is the way Modi government has completed 3 years in office, and the work so far is quite encouraging in the reform front. How do you assess the work done so far and the direction they are moving in now?
I think in many ways the UP elections were a watershed in defining the political stability of this country. With political stability now taken for granted, and economic stability relatively strong, I'd like to believe that India is perhaps poised for one of its better growth trajectories now and over the next 3 to 5 years. I think the timing couldn't have been better. Both India and the world is flushed with liquidity at this point of time. India, because a large part of our saving that used to go into real estate and gold is now kind of relocating itself back to financial intermediation, and that's creating, as I said, lots of liquidity. So the liquidity scenario, coupled with political stability and India's superior economic delivery, all leads to India becoming an outstanding destination for greater and greater investment and hopefully a better growth story. So I believe that we are perhaps, as I said earlier, poised for one of the finest economic growth trajectories that we have seen in many, many years.
Right, Ashok, now let's shift focus and talk about the markets. The Indian markets are at record highs. A massive amount of flows are coming in. In fact, many on the street are even not shying away from calling the market euphoric and are getting nervous. How are you analyzing the current state of markets right now?
Before I answer the question on stock market, let me go back to the bearish point you made about 6 months ago. 6 months ago, demonetization had just been announced, and we were all very concerned about the impact of demonetization. Some of us perhaps didn't get it right, and as government results have shown, government demonstrated its ability to deal with demonetization in a much better manner than any of us expected the government to deal with it initially. So the manner in which the government dealt with demonetization, minimizing the impact on consumption, and then, as I said, UP elections and the results of UP elections all have added to create a hugely positive environment at this point of time. Markets have, of course, run ahead of themselves. Indian markets, by no stretch of imagination, is cheap at this point of time. If anything, it's a wee bit expensive, particularly as you see corporate earnings, which have been relatively benign over the last 12 months. Having said that, there is huge amount of liquidity both globally as well as in India. And as I said earlier, India's superior economic position today makes it a very attractive destination. It's my belief that we will continue to remain in a relatively positive zone, unless, of course, there are unpredictable or catastrophic events that happen, and these can happen. I mean, these can happen. We sit in a relatively difficult world at this point of time, and any of these global events that happen, elsewhere in the world could have an impact. And if the sentiment gets dented as a result of that, clearly it will have a more than disproportionate impact on the Indian market, market has moved up on very positive sentiment, it can also get corrected on a relatively negative sentiment.
So let me ask you this then. What's the potential for our market from here on? Do you think then the upside can be prolonged for long?
Well, we clearly are in a very positive economic environment, and we clearly, and that's reflected in the market sentiment at this point of time. It is my belief that unless unpredictable events of significant magnitude happen elsewhere in the world or in India, the positive sentiment will continue to drive the market higher and higher. And therefore, assuming no such catastrophe happens, surely the next 3 years could be a golden run in terms of bullishness in the market and market breaching new heights.
Okay, golden run for the next 3 years. But, you know, how are you looking at this gush of liquidity that's just come our way unabated with domestic investors, especially, you know, keeping the faith? That somewhere, do you think, could, you know, maybe get the market a bit overheated, at least in the near term?
But there's no debate in my mind that certain sectors and certain stocks are perhaps, higher valued, not because the fundamentals justify it, but because there's so much demand given the liquidity. Also not forget that some of this demand is also because there are not, at the end of the day, huge number of companies in which global investors feel very comfortable investing. So it's a combination, I would say, of liquidity along with perhaps lack of enough number of corporates in which global investors feel comfortable investing. So that combination obviously means that there is some mispricing at this point of time, but that happens in every market, and that happens at any point of time. It can happen on the way up, it can happen on the way down. That's a common phenomenon.
Fair point, Ashok. Talking of corporates, talk to us about how's the sentiment among corporates right now. You work with several large ones and at the group level as well. Are they coming into the mood of talking about fresh capex cycle? Are they talking to you about how the earnings are relatively looking better now? Q4 numbers so far actually paint a picture which is quite okay, minus all the horrible numbers. What are they telling you about things of, how times could actually pan out from here on?
You know, if there is one thing that concerns me, it is that I still don't hear Indian private sector talking about investing in infrastructure or creating new capacity or capital goods investment. Despite the positive environment, despite the economic stability, despite the fact that foreigners are putting in so much money in India, despite the fact that global pension funds and insurance companies are investing so much money in India's infrastructure, I still have not seen that sentiment change within the Indian private sector. And that worries me a little, because at the end of the day, if people in India don't believe that the environment is ready for investing in India, then I think, it means something is missing. Now that could be purely because people have been waiting to see enough growth in demand, then enough kind of settling down of demonetization or introduction of GST. I'd like to believe that we are perhaps at that stage where you will start seeing the cycle change. We are hearing first early murmurs of corporate India talking about increasing capacity and making new investments, largely of course led by GST and the positive sentiment that GST has created. But I hope really that in the next 6, 9, 12 months, some of these discussions fructify into investments, and then I shall be even more satisfied.
My last question to you, Ashok, about flows. You briefly spoke about how you see flows from blue-blooded big investors, go from here on. They are looking eager to invest more. How you compare the flows which is likely to happen in the next couple of months and quarters from the foreign guys compared to how the domestics have really woken up big time to Indian markets and almost $1 billion coming in from their way on a monthly basis? How do you compare the two, and what's the outlook?
So here's how I would say clearly for a very long time, the very long only strategic type financial investors had not invested in India. If you look at the investment pattern, particularly in infrastructure over the last 2 to 3 years, the Brookfield deal with Reliance, the Brookfield deal with Gammon, CPPIB and CDPQ investing in different parts of Indian economy. All that says to me that strong, high quality, long-term investors now believe in the India story, and that I think is one of the best developments of this government's three-year regime. As far as purely FIIs and investors in the Indian markets are concerned, they've historically been bullish on investing in India. They have not partaked in the Indian growth story in terms of the market investment at the same pace as the DIIs have. But then DIIs have been flushed with money for the first time over the last 2 years. So it's natural to expect the DIIs to be investing more heavily at this point of time than perhaps FIIs have. But I don't hear about FIIs being disillusioned or wanting to pull out. I continue to hear positive stories. I continue to hear clear appetite to invest in the Indian markets. Just that some people feel that at this time the market is perhaps a little more expensive, and therefore they'd like to see if there is a correction before they step in.
All right, Mr. Wadhwa, we leave it at that. We're delighted that you could spare some time for us this evening. We really do appreciate it.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.